Welcome back everybody in the daily recap of New York session of the day 20th of July. And as always, we're going to see what happened on gold. So we're going to start from the 15-minute time frame. As you can see, this was the pre-New York session. As you can see here, this is the uptrend through all London Open, rejecting this previous supply area. As you can see, we can even extend over there. And then in the last 2 hours before New York Open, the price completely retraced. As you can see here on the 15-minute, gave also some chance to give like 50 pips when this 50-minute. I mean, you can also have this high risk, high reward entry over here, but as well for safer entries when the price is breaking below this level. You have all this range to fill till the next demand area. The demand area is already there from the pre-London Open. As you can see, price made an aggressive bearish move, liquidity grabbed, and then price, even though not the cleanest price action, but then it went up and created this huge demand area. So let's jump into the 5-minute. As you can see here, New York opens over there. So pre-New York grabbed some liquidity at the demand area and pushed the price up at this level, get a rejection in the first half an hour of New York, and actually the first hour of New York Open closes at the same level where it started. But with the new 4-hour, price made an attempt to break above this huge, which is this one, 50-minute supply area, goes above with New York Stock Exchange open, but then retraces all the way back down. Jump is again from this supply, finds another level of resistance, and now we are hovering down at the demand area. So the demand area has been touched too many times. 1, twice, 3 times, 4 times. This is the fifth time, and it's possible that the price over the next hours it will eventually break down, because this bullish liquidity, it's already done. So we had some huge supply grab liquidity over here for the price to push down. So if we are looking at price now making lower highs and eventually some lower lows, then we have a retracement over there. Then the price can aggressively break down and continue its way bearish to the downside. But let's jump to the 1 minute, and we're going to see what happened during the New York session. As you can see, we have plenty to look at, and we're going to start. So this is exactly New York Open. So if you have a look over here, that's where we are. So we are coming to New York Open, and we have this top of the range. We made this bottom of the range, and yes, we know that this is a demand area, so the liquidity grab here can be strong, and you can see it from the size of the bullish candles. And New York Open, it's very likely that if the price wants to continue bearish, it will not just from there just continue down. It will grab some liquidity, and this is exactly what happened, and this is what I was looking for exactly here. When the candle was hovering around here, I wanted to almost place a sell, and this will be not much, will be like 13 pips scalp if I entered over there. This is not a candle setup to enter when it's closing, because as you can see, there's not enough range. Price can give you some strong rejection even here, so there's not enough range from the candle close to there. So if you want to enter, it has to be high risk, high reward over there. You know that if the price continues down up, you don't have to take the 20 pips stop loss. You can even take a 10 pips or manage your trade accordingly, because in that case your trade idea is invalid immediately. And we're going to come back to that point afterwards, because it's something that really happened. So I didn't take this trade, and this one, okay, and it would be, I wanted to sell at the top, that was 10 pips. But anyway, I identified after this price action, look at the size of these candles, rejection very small with the wick, that the price could bounce from there. So as you can see, as I already had this, and I was talking about now about this level, but also the PPL and the top of the demand area was showing some further rejection, and I was considering buys over there. I didn't take it because I mean the volume is not in the chart, so it would be, I think, too high risk to enter. But the understanding of the price action was there, and of course this PSA will come afterwards. As you can see, this one will be a very nice 17 pips spike because of all these very clean wicks left at the bottom of the candles. But these are not wicks left over here, so that you take a buy because the small candles. I mean, it's happening at a PSA, it's happening at a PPL 1707, top of the demand area, and also very close to this level. So it is it's high risk, but it's not that super high risk move. So let me see. Okay, that's fine. Okay, and this one was one of the trade ideas, and we're going to see now the main mistake that I made today. So this one, 17-18 pips. I wanted to understand blah blah blah. So this is what happened, and it was not good. I understood that these small candles, after this strong rejection, as you can see, I had this price sensitivity area chopped up, and I was also having this white line. This white line, if you go on the 5-minute, it was based on this price action. So when I saw, when I saw this rejection, I said, okay, strong rejection at the demand supply area on the 5-minute. I didn't sell over there. I wanted to sell over here because I saw, okay, the price is staying below. It doesn't look like the price is going to bounce. It's not giving me this price action. It's not giving me these candles that the price wants to go up. Looks like that the price will stay down to have a spike, especially at COMEX open, and it would have been nice, but I didn't take it. And actually what I took, let's go and see, I took this stupid entry. So this candle, exactly this one, at the moment it was making a top wick and then was flipping bearish. I think it was like this, tuck, and then was flipping bearish, and I entered exactly here at the live candle. And this made I made many mistakes on this trade. One is entering at a live candle, and the second one, not closing even partials immediately when the price, the candle closed this bullish. As I was saying here, in this case, there's no reason. I mean, at this candle, the trade idea is already invalid, because if I'm looking to take advantage of this sell, pam pam pam, there's no reason for the price to close like this. It's not like, yes, maybe it will bounce and go down again, but there's no reason to have the full position, because I know that if the price is going to go here, it can give me further opportunity to give me a second entry, and that's what will happen afterwards. So the main mistake was to not to exit exactly at the candle close. and this is a mistake that I did, and I even failed to close 50% somewhere. Why? Because I was greedy. I said, okay, you know what? This stop loss is almost covering this PSA, so it might be that the price will react at 1710 and then go back down and continue in my direction. It almost happened, and even here I didn't take any partials because I said, okay, now price will go back down. But I was failing. You can see also the price was using it as a support to bounce back up. So that was not a good trade. And we're also going to have a look at it in details. It's exactly this. So should have taken the supply area was on the 5 minute, and the price was coming from a demand area, and I entered at a live candle. So hoping that the further rejection at the PSA over here would work is not how I should have done. I should have managed the trade. I should have closed everything exactly there. But I already explained about it, about the mistake. Then what? Okay, then this is a huge mess. I will not talk about in this chart, but let's have a look directly on TradingView. So what we have now is that we have now it's smaller, but it was much bigger because of course the PSA is the full last candle. I was using the full last bullish candle before the price kept going down, started going down. So as you can see, it was covering the full position, and it was covering these previous highs. So what happened was, okay, let me go with the replay. I know, I see that there's a huge bullish move, but I know even though that we can reject this huge supply area. Is something that happens a lot. It's something that on the 1 minute we can take advantage of. And I entered my first sell over here at the candle close. So I waited for the candle to close. I gave it 20 pips and I entered. Okay. Then what? Then I see the very next candle is flipping bullish. And when the price was there, I closed 50% of my position. Probably because of not wanting to take another full loss, but I closed 50% of my position. Then smaller candle, as you can see, and we are a supply. So these are all good confirmation for the price to continue down. And I entered at this candle close, so I had a second short position added. So I had here. So in this at this time I have, let me remove this. Okay. So I have two positions. One is already 50%, and this one is a full. I mean, this is a very good confirmation that the price can continue down. Grab some liquidity more, and price can continue down with volume and momentum. Then the very next candle, boom, bullish. And I think I closed 50% of this position over here. Let me check. Yes, I closed 50% of my second position over here. This one, of course, is running either at break even, either at a stop loss or in profit. And the very next one goes down, and from there goes to my 10 pips TP. So what happened is that I actually start the second entry. I take 10 pips over there for the full positions, but that's not the proper way to manage this trade. As you can see, we are now at a 15-minute supply area, so there's a much more confirmation. And these were the previous highs. My first entry and the second entry. I closed 50% and 50%. Okay, I'm taking high risk, high reward entries. What I need as a confirmation, I had strong liquidity grabbed and closing. Okay, I have a stop loss that covers everything. Another showing liquid momentum, and I take my sells. So it's very good to have both these entries. because it means that I know where we are in the chart. The point is that I think that I should not close 50% at these candles. I should have closed 50% if there were a candle closing above this PSA. There was no strong confirmation of the price breaking the supply area. If you see on this, my previous trade, already this one and this one were breaking above my supply area of reference. The issue was that I was using a 5 minutes supply area, which doesn't mean anything, but we were closing above, so I should have got out over there. But here, as you can see, we are not closing, we are respecting the PSA. Yes, it's quite choppy, I understand, it's not clear, bam bam, but that doesn't mean that I should take these losses, because these are losses. And if my trade idea is still valid, is a lot of noise. I don't know if I wrote it somewhere. The noise was strong because it's not clear. I should have not taken any 50% off because the price never closed above my price sensitivity area, my supply zone of interest. So that was a mistake. And I acknowledge it, and it's something that I'm learning from it. Immediately afterwards, what happens is that here you have it. So these one are closed at 10 pips. And I see what I see. These two candles, look, I mean, we have, it's not like they are happening randomly. They are happening after a rejection of a 15-minute supply area. So these candles are very, very interesting. They leave a strong wick on the top, both of them, and a very, very weak candle body, almost closing below the PPL, both of them. That's, for me, it's enough for an entry on the sell side. No, exactly. I think the entry was when the candle opened and then went a little bit below. This is a picture perfect entry for sells, and that's exactly where I entered. And yes, there was some noise at these previous lows, but went to 10 pips, pretty nice. Then it went back to my entry, so afterwards was just a partial win, so taking 90% of the position at 10 pips, and the rest was at break even, as you can see here. But this was absolutely nice, a nice entry. So 10 pips exactly on the dot. Afterwards, that was my last trade, but I was still on the chart. And look at this liquidity grab, closing almost bearish, and this is your further 20 pips, but I didn't take them. And you have this reaction, bullish momentum, bullish price action, and we're coming at New York Stock Exchange opening. And where are we at the New York Stock Exchange opening? We are exactly at our 15-minute price sensitivity area. As you can see here, we are exactly over there. I don't know if on the left we had anything on top. Should be, yeah, should be good. And we can even cover like this. And as you can see, price went very aggressive there. But now when I'm looking at the charts, I'm not scared anymore about this entry. Actually, as I can show you now, this one, there you go. This is exactly taken at New York Stock Exchange opening. Look at here, 20 seconds after this candle opened, 20 seconds. Look at the time. This is exactly the time. And 20 seconds open, I said, okay, this is a sell. If this candle closes bearish, not exactly this position, if this candle closes bearish with this pattern, it's a sell. And as you can see, price went a little bit higher, but then closes bearish. So this is your entry, and this is easily your 10 pips. As you can see, also from such a strong position, this is 15 pips, and luckily goes back to your entry before going back down. But I think I also saw this. Let me. These were, of course, as a scalper, you're not always right. These were sort of buys, but because of this support being created in a bullish trend, this big candle creating liquidity, this was an idea of buys. But I mean, immediately when I saw this candle exactly the same, leaving the wicks, top wicks, you can see them very clear. 1 and 2. This was for me a perfect entry for the sells on the sell side. Okay, exactly, pretty simple, and it's something that happens. It's not like it goes to a liquidity zone and then just simply drops. There's always a retest and then goes. Sometimes it's just at this PPL, which is also this high. It goes up and then continue down, but now went a little bit further, but grab the liquidity exactly at this point. It's something that happens. I think it happened also yesterday, and I will go back and show you. And let's see if afterwards I was looking at something else. I was looking for buys, because I mean, if we are looking at from the liquidity areas, this was a 15-minute area. This was the strong PSA, strong support that was created, and that I showed you multiple times already, was created from here, and we are at a demand area. So when I saw this huge drop, I saw, okay, there's 15 pips, there's enough space with this candle set up, this candle set up, this candle set up, this candle set up, this, look at this candle setup, is exactly the same. 13 pips is more than enough. The probabilities of price going at least 10 pips are too high, so high that the risk to reward ratio doesn't matter. But you already see these candles. It's not like I didn't see them because I was in a buy setup. This is about having a clear mind on the charts. Yes, I would have taken this buy. I would be partial taken and the rest at break even. That means that I have the mind clear, in a clear state of mind to see this price action. And now, after taking the buys, 15 pips, look, I identify at the first candle that this can be an end of pullback. As you can see, the momentum is coming from the liquidity. Yes, we have this push, but it's not like I don't see this candles closing. So that's why I at 4 p.m., which is the 10 a.m. candle, which is exactly when this candle closed, I took the screenshot. I put, okay, yeah, this is the possible entry. It was even, no, it was, sorry, spoiler. It was 1 second of this candle. So, bam, that's it. 20 pips. 20 pips. Even more, 26 pips. That's it. There's nothing else to say about these candles. I already talked about them over here. Over here. Look here. That's why I should have not taken the partials, because this price action is giving me confirmation of the price going down. That's why I took this entry. This entry over there, because the wicks on the top are giving me too much information. That's why I thought about these buys. This one. And furthermore, yeah, this one, these buys, these short candles, and yes, that was basically it. Very good. And I wanted to show you about yesterday. Okay, yesterday, London. Okay, New York, exactly. Yeah, that we saw this huge support being created. And then we understood this price action and these candles. Look how weak they were showing. The candles, look in the wicks that are living on the charts, the strong price action. And yesterday, I don't even remember what I took. Let's go and see. Okay, I took this one. Yeah, as you can see, perfect candle setup. And then I took the continuation over here. And this one was the loss. Because it was a live candle, as you can see. I entered at a live candle. Again, another mistake. And these and these candles are leaving top wicks. So that's why that is exactly what I'm looking at in the charts. Look at this level over here. Flat candle bodies and very strong wicks left on the top. Look here. This was the same PSA. Put together with the top wicks. And you can have a look at how the price action changed exactly at this level. And this is clear. 12 pips trade, very simple, very easy. I think yesterday I saw something else. No. Okay. No. Maybe it was another day. These wicks on the top. These wicks on the top. See live. And that's it. Look at the wicks on the top. Okay, guys. This is it for today. I hope you guys enjoyed. See you guys tomorrow. And exactly as I was talking about during the previous video, look at the price action over here. As soon as the price broke these previous lows of this huge demand area, huge drop. That's it. Now price is reacting, is bouncing, but that I was talking about. This demand area have been touched too many times to be still valid. And look at this price action creating a wedge against, I mean, look, liquidity grabbed on the top, lower high being created, wedge against the level, and the drop, exactly as I was talking about in the previous video.